afternoon again. Good afternoon, magandang hapon sa inyo, and welcome to Basic Technical Analysis, and essentially how we can use technical analysis to help you at least be better stewards of the money that you entrust with us, the money that you entrust in the COL accounts that you have with us. So just to say something a little about myself, I've been in the stock market for around 12 years now. I've been doing it professionally, managing other people's money for 8 years. And in COL, there are a lot more other people like me. So we're around 50 people. And from my own experience interacting with these other people, having lunch with them, exchanging ideas with them, bumping ideas, debating back and forth, if there's one thing, one common thing that I can impart to you today, one thing that is shared by not just myself, but majority of the professional fund managers inside COL, at least for the independent financial group. Kasi in the stock market, there are a lot of ways that you can make decisions. You can make decisions based on fundamental analysis, based on value, based on growth. You can make decisions based on what you read in the newspaper. A lot of people make decisions based on what their friends tell them, what their family tells them. These days, a lot of people make decisions based on the Facebook groups that they're a part of. The point that I want to make is that there are so many decision points, so many information points that you have to consider for decision making. But if there's one thing, one discipline that me, myself, and other fund managers share, is that when we're faced with different decision points, information, the one thing that we follow above anything and everything else is price. Let me explain. For example, if we go through an annual report, and the annual report doesn't show us any red flags in terms of the company's growth, the company's valuations, the direction of where the company is going, but price is already breaking down, who do we follow? As a fund manager, we follow price and maybe not buy the position or maybe cut our position. If, let's say, we come across and talk with the management of a company, obviously talking to management is good, but let me ask you something. When you talk to company management, will company management tell you anything bad about their company? Yes or no? Syempre, no. Maybe they're going to try to show you the good side, but it's our job as fund managers to make sure that we get the full picture. If we're talking to management and price is going the opposite way in the form of prices breaking down and moving lower, who do we follow? We follow price. There have been times in the past when, without any of our initiation, company owners would come to the office and promote their company out of maybe chance, obviously to serve their own interests. When that happens and we see price moving the opposite way, who do we follow? We follow price. The point that I want to make is that a discipline as a fund manager, whether you're looking at the macro, funda, if everything conflicts with each other, obviously it's better if everything overlaps with each other and points towards the same direction. But if everything overlaps with each other, we always follow price. What we're teaching you today is not just a seminar or a lecture, but it's actually something that we use every day. And it's something that's been given to you by people who have actually used it to make it work, and not just by some lecturer who just gives seminars for a living, right? So let's get to it. Basic technical analysis, our roadmap for today, obviously we'll talk about what is technical analysis, why is it important, and then we'll talk about step 1 in making decisions in technical analysis, which is identifying and following trends. Very important. And then understanding corrections and area patterns within those trends, how to use indicators, and lastly, tying everything together into a trading plan. So what is technical analysis? Roughly around 2 to 3 years ago, The global head of the Market Technicians Association came to the Philippines. He came to Asia to visit all the Asian countries. And he told me something that I would never forget. Sabi niya, if technical analysis was only named behavioral finance or behavioral economics, then we would have a lot more practitioners around the world. Why is that the case? It is the study of price and volume in any type of security. Generally, when people make decisions in the stock market, they make decisions based on analyzing maybe what they read in the newspaper, analyzing a research report, analyzing a brokerage report, analyzing maybe what they picked up on Facebook via hearsay, right? What technical analysis does, it doesn't make decisions based on opinion. Rather, it makes decisions based on what you see is happening in the market. What you're seeing essentially is the collective decision-making of buyers and sellers as it moves the price of a stock. So let me ask you, if majority of the market is buying a stock, what happens to price? Does it go up or does it go down? Goes up, right? If majority of the people are selling a stock, if the intensity is selling is greater, what happens to the stock? It's going down. So essentially what technical analysis does is that it looks at the collective net of where prices are going pictured into a graph or a chart. So if you'll see, that's what's happening to our market today. So this is essentially what technical analysis does is that it uses charting software to make decisions. So charting software, you can see that the predominant trend, what has been happening at least from a technical analysis point of view for the past 3-4 months, have people been mostly buying or selling? Selling. Thereby prices moving lower in a general trend. For another point I'd like to highlight is any type of security. When you do technical analysis, you can actually use technical analysis to make decisions for other types of products besides the stock market. Forex being the biggest financial market in the world. What's the second largest financial market in the world after Forex? It's the bond market, right? So when you're trading bonds, you know, it's funny in the Philippines. Philippines is the only country, I think, in Asia where 90% of the bond market is traded by the banks, right? Around the world, it's pretty much traded by retail investors, people like us. But traders, if you're trading bonds, then you can also use technical analysis to make decisions there. When you trade commodities, people primarily use technical analysis data as well. You can use that for precious metals, gold, silver, platinum. You have rare metals these days. You can use that for soft commodities, orange juice. What are other soft commodities available? Wheat, soybean, corn. You can use it for sugar, exactly. You can use it for other industrial commodities. Like what are industrial commodities? You can use it for nickel, right? Nickel, majority of which is used to produce stainless steel. You can use it for iron ore. Cryptocurrencies is something that you can apply technical analysis to. You can also use technical analysis to stocks, indices, mutual funds, index funds that track the index. Then you can use technical analysis to analyze the index as well. You can also use it for forwards, futures, and other type of derivative instruments for the purpose of deducing the probable future trend. If you look at the stock market, people have always talked about and overstressed about the need for intelligent effort in understanding companies. There has been a lot of literature written on that, but what has not been tackled is the need for intelligent effort in timing your investment decisions. And when I say timing your investment decisions, most people, when they enter a COL or when they open a COL account, first question that they always ask is, what do we buy? After they deposit the 25,000 or their cash or the 5,000, so what now? Ano nabibili natin? Right? A lot of people aren't aware that there are other important questions that you need to be asking yourself. Like, besides from what are we supposed to buy, when are we going to buy it? When are we going to enter? Because the when question not only tackles when you're going to enter, it also tackles how long you're going to hold the position. It also can help you answer when are we going to get out of the position? When are we going to take profits? When are we going to cut our losses? These are all important decisions that need to be asked when it comes to at least watching over your investments. And it is the when to enter, how long do we hold, and when do we sell that can be intelligently answered using technical analysis. So obviously, this is the Philippine Index since 1995. Over the past, since 2003, we had the bottom of our 15 to 20-year cycle bull market. So that's when it started. For those of you who don't remember, 2003 was actually EDSA DOS. That was EDSA DOS. That was the EDSA 2 revolution. And then prices went all the way from 980 all the way to 3,500 before dropping 57% and then moving up almost 4 times, 5 times for the past 10 years now. Using technical analysis, I will be very honest with you that we use technical analysis, at least even before I entered COL. COL used technical analysis to at least sidestep this drop over here. 10 years ago, when COL only had less than 10,000 customers, we actually had the market briefing here in this room. And it was actually in this room, I was seated, I think, right over there, the guy with the red shirt. And the head of COL was here, and he said that using technical analysis, we actually see a lot of technical breakdowns and technical red flags already in the US stock market. This was during the October 2008 period. And he actually advised all the customers to already liquidate most of the positions. I remember that very vividly. Masakit sa akin yun kasi hindi ko sinundan. I held on to my position. Sabi ko, ano naman long term naman ako. I said that stock market is long term. Look at Warren Buffett, di ba? So I held on to my positions, and long story short, I lost more than 60-70% of my savings. I didn't know that prices would go up after, but at that time, if I knew what, I mean, everyone says this, if I knew what I knew now, back then I probably would have been able to sidestep this drop, as we have used technical analysis to sidestep this, to sidestep the next 25%, this 20%. And even just recently, we used technical analysis to liquidate majority of our positions early February. And right now, we're 13.3% down from the peak. So the market's in the red while we're still sitting in at least a relatively healthy, positive position for the year. So why do we need intelligent effort in timing? Let me tell you some of the characteristics of price and why is price important.